JJ, the CPA here. Hope you're doing well. Hey, I'd love it if you'd subscribe. If you get at least 2 minutes into this, I'm probably giving you some value. And if you're not a subscriber, boom, I'm bringing it every time, or at least I'm trying, and I'd love to have you a part of my subscriber list. So here's the deal. What are we doing for July 15th? Don't even snooze for a second here as it relates to the fact that I'm going to talk about taxes. But as it relates to PPP, EIDL, the PUA, we've been spending a lot of time and effort on that. A couple of quick things to note here, okay? That PUA and unemployment, it is taxable. So you want to know how much have you received so far, how much do you plan? Make yourself a note of that. You're going to get a 1099 in January. You're going to need to include that on your tax return. If you want to withhold some tax right now, I'm telling you, just like that, if you withheld somewhere around 15% federal, 5% state, maybe less, maybe none. If you need the money, I get it. You may not have any taxes withheld at all, but that would be kind of a rule of thumb. I would tell any client who's talking with me about how much they should have withheld. None is fine. You're just going to have to incorporate it with your taxes either way later. On the EIDL, know this, whatever you're spending those dollars on, okay, you get to write them off. It's a loan that you're getting, right? So you are getting a loan from the SBA, whatever you're using those funds are, which needs to be for business and ongoing operating expenses only, you're getting that as a write-off. So when you're doing some tax planning, think that through. As you are spending, if you got the economic injury disaster grant, that up to $10,000, $1,000 per employee, that's the max, $10,000. Whatever you spend those dollars on, business purpose, you're not going to be able to deduct those expenses. So be aware of that. I've got a number of videos that talk about it and the uses and playlists and how to record it on QuickBooks. But the thing to note for tax purposes is that if you get $3,000, you're not going to be able to deduct those expenses. Now, if you're self-employed, you are using those funds. You are to use those funds for business expenses. So for the self-employed, it does affect you, unlike PPP. Now, with PPP, the Paycheck Protection Program, for those that are employers, the money that you've got that you're going to spend or have spent with the PPP funds, you're not going to get a deduction for that. How does it really work? Well, just take whatever your expenses are for the year for your business, what's your PPP loan, and in essence, subtract that amount from your expenses to the extent that it's going to be forgivable. That's simple, just as a 10,000 foot overview. So be aware of that as you're doing your planning for taxes, which may not be anywhere near a priority for you, but as we're thinking about these things going to July 15th, when first and second quarter estimated tax payments are due, be a good time to think about it. Now, as it relates to the tax deadline, a couple of things to note. I'm going to give you something really good and valuable. I'm glad you stuck with me for now. But if you owe tax for 2019, just know this. July 15th, it's due. You can get an extension easily. It's Form 4868 and go online. It's simple. You don't sign anything. It's easy. But it doesn't extend your time to pay. Now you have a 10% margin of error, but at the end of the day, you need to pay in whatever you owe. Otherwise, there's going to be penalties that are assessing. Basically, about a 5%, annualize it out, maybe 3% in interest, annualize it out. Don't think though, well, that sounds inexpensive, because there's other penalties, and upon penalties that can accrue over time. It's not really best to owe the government forget flags. They don't care that you owe them money. No one wants to come and talk to you because you owe them $5,000. They could care less about you. What they care is, are you making payments on it? Now, first and second quarter estimates. Okay, you ready for this? And I already know what I'm getting ready to say. It'll be controversial, and I don't really care, because when I'm talking with my clients and we're looking at first and second quarter of estimated tax payments for 2020, so for the self-employed and for the business owner, if you're going to owe more than $1,000 in federal taxes, the IRS requires, always has, that you pay estimated tax payments. Now, you may have, as an employee of your own business, wages and you're withholding taxes. Well, that counts towards that. But for the self-employed, you're not paying yourself wages. For the self-employed, you have self-employment taxes that come into play. So for first and second quarter, when you're doing the estimate, this is what I'm doing with my clients, because we are in, unfortunately, unpredictable times. And when it's unpredictable, I don't know the revenue that's going to come in. What we have counted on in the past, we may not be able to count on in the future. When you make a quarterly estimated tax payment for 2020, you will not be able to get it back, period. You're not going to be able to get it back until you file a tax return for year 2020, which will be in 2021, right? So maybe you can file immediately and get everything in by January 31st, February, great, but you're still going to have to wait to get your money back. And so what I'm talking with my clients about is being very cautious on what is getting paid in, because you don't know if you're going to need those funds. Now, what can be controversial about it is for those that just do a simple math equation and don't really want to put any extra thought into it and run around acting scared because it's fun to think the IRS is going to care that you didn't pay them an estimated tax payment for 2020. The IRS doesn't know. They wouldn't know what you're supposed to pay or not pay until you file your return in 2021 for 2020. So you're gonna have to just keep listening to what I'm getting ready to tell you to get the full story here. But when you're looking at your estimated tax payments for 2020, what you want to look at is, okay, well, what's my income been year to date? Now, when you're paying any estimate, it's always due on the 15th of the month, and it is to assess the activity through the end of the month prior. So July 15th would be looking at your activity for your business, self-employed, or your net income from your flow through June 30. So you know what your income is. It's kind of impossible not to know. And if you don't, you need to get on the stick and figure that out and regularly know it. But you're going to know what your gross income is. You're going to know what you brought in. And I'm talking collections for those that are cash basis, which is 95% of small business owners. But from the standpoint of what you bring in. Now, what are your business expenses for the first 6 months? Well, you should be able to know that. You should have a P&L. Pull that up. What were your expenses for the first 6 months? Okay. So when we're doing an estimate, it is available to you to do this, and you file with your tax return, your individual tax return, a Form 2210, where you do a calculation to indicate to the IRS later what your income was, what your estimates were in determining what you needed to pay in, which is just all to say, the IRS doesn't know anything now. They're gonna know it when you file the return. But when I'm talking with clients, I'm saying, well, we know what income you brought in for the first 6 months. We know what your expenses are for the 6 months. I don't know that we need to count on the same amount of income for the next 6 months. We know we could probably count on the same expenses for the next 6 months, our fixed expenses, rent, payroll, utilities, mortgage payments, loan payments, etc., right? That's why it's important to be aware of your numbers. If you know your numbers, you know your business. So what you're wanting to do is, where am I standing so far this year? Remember, distributions to yourself aren't a deduction, so don't be fooled by that. Point is that know where your net income is for tax purposes, not what's in your bank and what's left over. It doesn't mean anything. Know then you're going to probably have a lot of those same expenses for the next 6 months. But then what is your income going to be? Well, how do you know? I mean, right? I mean, every business shut down for weeks, months. So I'm not saying that you want to go to doom and gloom, but for a tax estimate, for dollars that you're going to be paying in that you're not going to have access to until next year, you need to think smart about whether or not that money would be better in your pocket until next year, or the government's that will not be able to. There's just not a way that you're going to get that money back. So when you're doing a tax estimate, that's what it is. So when you pay in later on that Form 2210, you're putting in there, whether you know it or not, here's the payments that I made. And they have the key dates. So for this year, it's July 15th, September 15th, January 15th. Those will be then the times that you're paying in estimated taxes for 2020. So for my clients, I'm not necessarily just doing safe harbor, which is just what was last year's tax, and let's at least pay that in to hit what's called a safe harbor to avoid penalties and interest. I'm looking at where do you stand for the first 6 months, and do we want to be a little more eyes wide open on what's going to happen in the next 6 months to determine what we need to pay in. And I'll tell you this, I have a number of clients, attorneys, that are contingent fees. So I'm just giving you one example, contingent fee attorneys. Well, we know what they've collected so far for the year. We know what their expenses are. We can pretty well know those are going to be the same expenses between now and the end of the year, the last 6 months. But we don't know if they're going to bring in any income. I mean, they might have cases and go into mediation, and they might think they're going to have some settlements come in, but they don't know if they're going to. Courts can be closed, insurance companies could be affected. So when I'm doing a tax estimate with the attorneys, I'm taking a year's worth of expenses, which is the last 6 months. I'm just going to double that. Here's a year's worth of expenses. And I'm going to go, well, then here's the first 6 months of income. What is that for the year? What's the net income for the year? Well, if someone has brought in $50,000 and $40,000 is their expenses for the first 6 months, right? Do the math with me. The first 6 months, $40,000 of expenses. Well, it's probably going to be $80,000 of expenses for the year. They've brought in 50 grand. Well, assuming that's potentially all that was brought in, you following the math, they're looking at a $30,000 loss projection, because that's all an estimate can be. You pay the lesser of current year tax or prior year tax, but you have the opportunity to, on Form 2210, indicate what you believed your income to be. Now, what can be controversial, and you can just save it, okay? I'm not interested in the technicalities because we're in a pandemic. I'm not interested in any comments about, well, you have to do this and you have to do that, because you then clearly know more, and I don't even mean this sarcastically, you know more than 99.9% of anybody that's listening to this, and you're probably the one that is paying penalties. You're probably the one that is allowing your clients to pay penalties, and you know what, that's just not me. That's not how I operate. It's not how I work. So for those that want to put everything in a square box, this video right now, your blood's already boiling probably a little bit. Well, so too bad. My point in saying all this is that be conservative in what you're going to pay in July 15th for 2020, because you're not going to get that money back, okay? So if you're with someone that's helping you with your taxes, and they say, hey, here's an amount that you need to pay for 2020, ask about it, question it. They might have just given you a number based on last year, which is lazy, but that's possibly all it is. If they didn't ask you any questions, it's lazy. You don't necessarily have to pay that in. And so for those that like to think the IRS knows who you are and cares who you are, just stop, because they don't. They don't know who you are. They don't care who you are. There are no such things as flags other than you're a drug dealer, you showed that you made $1 million and you had $1 million loss, and all the goofy things you could ever think about. Mostly the ones that are worried about the IRS and worried about flags don't have them, okay? So stop being dramatic about the IRS. It's just not, it's pointless. What I need you to know is this. If you are concerned about paying in those dollars, then don't for 2020. Because if you're with somebody that will work with you and understand, and I'm not talking about a wink wink and bending the rules, I'm talking about actually somebody that knows what the hell they're doing and knows how to work with a business owner, an American citizen, and can look at what is the income, what were the projections quarter by quarter, what were the requirements. Because if you can't make the payment, that means you're not making enough to then have to make that payment. You follow? You're getting ready to pay in $10,000 for your second quarter estimate, and you're like, I mean, where am I going to get that? I'm going to have to go borrow it. You probably shouldn't be paying in $10,000 because there's something going on that's affecting your cash flow that may not then require you to pay the $10,000. And for those that enjoy telling you that the IRS says no, and they love for you to be thinking that the IRS is underneath your bed every night, you need to stop working with that individual. If the response to your questions are, well, the IRS won't allow that, you just need to fire that person. Go find you someone else to work with, because that's just a lazy tax professional. Okay? Either they don't know or they don't want to spend the time. Okay? If they, oh, that's a flag. It's BS, BS, BS. Okay? There aren't flags. I don't care who you are. I don't care. Okay? There's no flags that truly exist. There might be targets, as in, well, people that are making over a certain dollar amount, they get looked at by the IRS. Okay, well then their whole tax return is a flag because they made more money. Okay, so let me just pull it back and tell you this. You come first. I hope you made it to here. You come first. You come first. Your business comes first. Your house is on fire right now, potentially. Okay? If you are sitting there with 2 buckets of water and your house is on fire, and you're like, well, I think I need to give some of this water to the IRS because I got a voucher from my tax preparer saying that this is what I got to pay in, or I thought that I needed to pay this in, or I think I'm having a different year. First of all, you shouldn't even be thinking about, am I giving some of this water if your house is on fire? You got other things to be looking at. You need to be looking at, where are you in 5 weeks? Where are you in 10 weeks? Are you going to need that money? So there's lots of ways, and I guarantee there's going to even be new ways and additional relief. Have a leap of faith. Okay? Now, let's just say that they don't. Let's just say that the IRS, you get up on April 15th and holy crap, April 15th, 2021, holy crap, your entire life you had no clue there was a whole IRS office underneath your bed. You had no idea of it. Okay? Let's assume that you then show up and there's a red light going off in your entryway because you just ignited a flag to the IRS. Okay, that you didn't even realize, but the return that you submitted, when they opened it, it glowed, and they were just like, "Oh my gosh, we're going to have to look at this." And it turned out that when you went to go get some groceries that morning, that there were 5 IRS agents following you. Okay. It's just not the case. Okay? Here's the worst thing that happens. Okay? It's some penalties. Okay? Penalties is not jail. Penalties is not they come and take your house and they take your car. They're going to come and audit you. No, they're not. No one gets audited for penalties. Maybe if you're a gangster and you are doing illegal activities, yeah, maybe they're going to come and take a look at you. Maybe if you don't pay your taxes ever, maybe if you constantly owe every year $185,000 and you haven't paid them in 10 years, yeah. I mean, it takes them about that long before they're going to knock on your door. All I'm saying is, what's the worst thing that happens? You have some penalties. Now, we can run around and act scared about that, and we can run around and say, well, I can't believe that JJ the CPA is saying to do something that causes penalties. Then wake up, because you don't realize you're in 2020 right now. You don't realize all the things that are going on. There's a house on fire, and it could be yours. So all I'm saying to you is what you risk is penalties. You don't risk jail. You don't risk an audit. You don't risk an inquiry. You don't risk anything other than some penalties. How much, JJ? 5%. Okay? And it's not if I have to make a $2,000 payment, is it 5% of that? I mean, at most, but the 5% is divided out. It's annualized. So I'm not saying it's small potatoes. I'm not saying that don't pay your taxes and who cares because you're going to pay penalties. We're not in normal times right now, okay? We're not in normal times. Did you go buy some extra toilet paper? If you normally get a 12-pack of Cokes, did you ever go to the store in the last 3 months and just go ahead and pick up 2 packs, right? You're just being precautious, right? A little extra toilet paper. Well, this is the same thing. You want to be a little cautious about what you're paying in for 2020, because you can't get the money back. And you can annualize your income on Form 2210. Just go irs.gov 2210. You'll find the multi-page form. You're going to find the instructions. Feel free to go through all of it. You might have some underpayment penalties. You probably have some underpayment penalties if you're suck and win and you're not doing well the first 6 months, and you're with somebody that you still end up with an underpayment penalty. You're with somebody that doesn't know what the hell they're doing, or you're with somebody that wants to be towering over you, and there is a personality type out there, unfortunately, in my profession, tax professionals, whether they think it or not, that they get off on you having penalties because they have some kind of power. Okay, now don't get me wrong. I've been doing returns tonight and clients have penalties, and I'm going into 2210, that form, and I'm looking at, okay, well, what part of the year, what were their requirements? And they're still ending up with penalties, but I'm putting time and effort into it. I'm trying to make sure I can get the penalties to the least amount by indicating on this form 2210, well, what were they making each quarter? What was their requirement? What is expected in a normal set of circumstances? So if it bothers you, and you're watching this, if it bothers you, anything that I said, and you're a tax professional and you're bothered, come on. All right. So for those of you that aren't tax professionals, take it from me, JJ the CPA. It's okay. It is okay if you don't pay in all, or it's okay if you don't pay any of your 2020 estimates. It's not an audit. No one cares. No one's going to come visit you. It's not going to trigger any kind of red flag. Now, yeah, you might be stuck with a penalty, so let's be real clear about that. You might get, so if you're somebody that doesn't like penalties, then don't do this, okay? But if you're somebody that doesn't like penalties, you're probably also the personality that you got a lot of money. It's probably set aside. That's kind of the personality trait. People don't like penalties, they got $50K sitting in the account in their emergency fund, so then pay it, okay? So find the balance. You're going to have to find the balance. Okay? So let's just say that your quarterly estimate is $5,000 a quarter, And so you need to pay $10,000 July 15th, according to the plan, according to a calculation that's being done right now. Okay, so 10,000. Okay, at most, it's a $500 penalty. And you're right, your mind's blowing. It just popped right off. Oh my gosh, are you telling me that you just gave me advice that's going to cost me $500? Then you know what? Then you're not in an emergency set of circumstances. You're not. So why are you watching this right now? Excellent. Good for you. You're not in an emergency set of circumstances. Okay? Right now, that $10,000, are you going to need that to pay rent? Are you going to need it to make a mortgage payment? Are you going to need it for groceries? Are you going to need it for utilities? Like, wake up. Are you going to need that money? Because whatever fears you have about not paying in comes down to, at most, a 5% penalty. Yeah, $500. But here's what's weird about it, right? Well, not really, because you'd only have been underpaid for half the year, right? So really, it's about a $250 penalty, right? So now, there's so much that goes into this. There's late payment penalties, underpayment penalties, late file penalties. There's interest on top of that, right? So don't be like, it's like, oh, well, it's only $500. I mean, I don't know your set of circumstances. You might be also underpayment, late payment. You don't file an extension, you have late filing payment. You're all of a sudden, you're looking at 15% in penalties. I'm talking about for those that you're getting ready to pay a quarterly estimate and you're like, man, boy, if I pay that, what are you doing? Like, let's reevaluate here, okay? Let's reevaluate. Put yourself first, put your business first. The IRS does not need to come first in these circumstances. And they're okay if they're second or third in line because they just tag you with a penalty at the end. But I'm telling you right now, 27 years going, 28th year of practice, they're going to, because they historically have done this, they're going to provide relief at some point for those that couldn't pay or couldn't pay all of their estimated tax payments because they literally couldn't, right? So I'm not advocating to the person that has $100,000 in the bank that business couldn't be better to not pay in your quarterly estimates. I'm talking about the one that's got $15,000 in their bank. They're staring down a $5,000 quarterly tax estimate, and they're at 50% capacity, or business still hasn't regained. That's who I'm talking with here. So what's the overall theme of this? You don't need to be afraid of the IRS, period. This is like whatever stories you heard and whatever stories you like to tell and whatever stories, because it's kind of weird. People like to be afraid of the IRS. It's weird to me. Like, they enjoy it. They just do, okay? It's fun to be scared. It's fun to go on a roller coaster, okay? It's just ridiculous to be scared of the IRS. Now, yeah, if you're doing illegal activities, I mean, maybe you should be scared of the IRS. Maybe you should also be scared of the other legal authorities. Long story short, what I'm getting at is you are only risking penalties here, okay? You can't do everything risk-free, and if you want to do everything risk-free, then just pay in your quarterly estimates, okay? But then don't start crying and whining later when you're like, holy crap, I'm out of money. The bank's not giving me my line of credit. My credit at the credit card company has been lowered, when you could have just held on to that money. And then guess what? Check this out. You ready? You can just pay it later, okay? If you're July 15th, okay? Well, the next quarter's due September 15th. Then pay it then. Make it up then. You just reduce down your penalty. So you're going to have a penalty for 3 months, right? So what's 5% divided by 12 times 3? And now we're talking 1.25%. Oh my gosh, what? Yeah. Okay. So the Internal Revenue Service has said they're not going to move the deadline of July 15th. But there's going to be relief to come, and even if it isn't, yeah, you're going to have some penalties. So if you're going to be mad next tax season that you have penalties, then pay it all in, right? Pay it all in. Ignore everything that I'm telling you to think about. Just pay it in, okay? But if you're somebody that next tax season, you're like, okay, I got to pay that 10 now, but man, I was so glad I had that during that time, right? Because I didn't have enough otherwise. You're going to have a penalty, okay? It's just an estimated tax payment. It's not the end of the world. No one's coming knocking. They're not underneath your bed. As much as you love to think that they're following you and they know who you are, they don't care who you are. They don't care. I don't mean like mean. They don't care who you are. You're a number in a system. It's called a Social Security number. You report, you pay, you move on with life. Okay? You know why I'm knocking? Because I've been practicing my 28th year. Never had an audit adjustment on a return that I prepared. Never, ever, 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 ever. You know who gets audit adjustments? Lazy tax preparers that tell you, oh, the IRS isn't going to allow you to do that. Well, that's a lazy person. It's a lazy tax preparer, and you will get an audit adjustment with that individual because they don't know what the hell they're talking about. The IRS won't let you? Where? Where does it say that in the instructions? Show me. Okay? Because nowhere in the IRS law does it say, well, the IRS won't let you. Okay? How do you know? Okay, well, they're an expert, you know. They said that I can't do it. Okay? Whatever. Oh, you can't do that. It's a flag. Go somewhere else. Go somewhere else. Okay? I know the law. When a client asks me, can I do this? I tell them why they can't. Or I say, well, you can't do it this way, but if you do it this way, we can. Right? Hey, can I write a suit off? No. Well, I can't? No, because the law is specific that if you're going to wear clothing on the street, okay, you don't get to write it off. Oh, well, what if I put a little, stitching right there, the name of my company? Well, can I write it off then? Well, I mean, are you giving it to all your employees? Is it something now that's kind of a uniform? Maybe, but if it's like, oh, so if I go and get a bunch of polo shirts and etch it on there, I get to write it off? No, that's not what I'm talking about at all. But if something turns into, hey, we only wear, yellow shirts, we have it stitched, I give them out to the customer, to the employees, this is what we wear at the office. If incidentally you wear it when you run to Target, okay, it's probably more of a uniform. Your khakis, and does everybody got to wear khakis? You see what I'm saying? Like, the answer is not, oh yeah, or well no, or the IRS won't let you, or to that question that I actually had today from a doctor, that's the answer that I gave him. Not, no, the IRS won't let you do it. All to bring it back to say, I'm telling you the real. And the real is, the only thing you have to fear is up here, and then the reality of what your cost is for not paying in 2020 estimates, assuming you would be detrimented or to be detrimental for you to pay them, is penalties. Okay? So here's the deal. I am JJ the CPA, and I am telling my clients that we are going to be conservative paying in July 15th because we are in a pandemic. We don't know what's coming. And no, I'm not being an idiot and being ridiculous in the forecasting. But I'm not going to just assume with my clients that everything's going to be the same. So I'm spending a little extra time trying to figure out what do we need to pay in. And yes, I have some clients that they're closed. And I am saying to them, we're not going to, why pay in your quarterly estimated tax payments for July 15th? We're not doing it. Maybe you can make it up later. What if you don't recover? Because you're not going to get that money back, client. You're not going to get that money back. So here's really your takeaway, if you've even made it to here, is if you're puckering up, and I don't just mean like the normal puckering up that you got to write a check to the IRS, right? I mean, no one likes doing that, right? But I mean if I pay that, and I mean, like, I can just feel it right now, like you just feel it coming over you, then you need to rethink it. You're somebody that probably, it's okay if you had a few $100 penalty later. Okay? It's okay. You can make it up later. Or even if you're like, well, maybe not. And send it in August. Send it in September. You can send it in. It'll cut off at the time that you send it in. So go easy on yourself. Put yourself first. Put your business first. The IRS is okay with not being first because they'll get their tax eventually and they're going to get a little extra tip. It's called penalties. Okay, so for any IRS agents that are watching, right? At the end of the day, yeah, you're required to pay in, but what happens if you don't? You have a penalty. Okay, you're required. What if you don't? You have a penalty. Right now, if you're paying $100,000 a quarter, clearly this video isn't for you. Okay, this isn't, right? I mean, not unless everything's falling and burning in front of you. Maybe it is. All right, hey, it's late. Oh my gosh, it's 1:20 a.m. Got conversational. All right, hey, if you made it to here, you're already subscribed, and I love you, and I appreciate you. Thanks for tuning in. And this video isn't for everybody, but this is conversations I'm having with clients right now. Thought I would share it with you. Take it for what it's worth, but I'm looking out for you. I'm looking out for you, and for those that maybe don't have someone that they can call all the time, hopefully you're getting something out of this, and what I'm hoping you're getting out of this is some relief and some confidence and feeling okay that if you need to hold on to some dollars, you might just have some penalties, and that's it. And then in future years, okay, you just need to pay your taxes on time. I mean, normally I'm telling clients, no, you just need to pay them now. Let's get them paid in. You know what your year's going to look like. Let's not get penalties like you got the money. Let's pay it. But I got clients with their houses on fire, so my advice is changing with that because I care, and I care about you. All right, hey, thanks for tuning in. And if you made it to here and you didn't subscribe, wow, really appreciate you, and I'd love it if you'd hit that subscribe button. And then don't you ever forget, you've never met a CPA quite like me. All right, thanks for tuning in. Talk to y'all soon.